Hey guys, Mike here. So today we're going to talk about Palantir stock and SoFi stock news with a potential huge catalyst coming up from Palantir, which I'm excited to talk about. And then SoFi stock, of course, announced a new partnership which will help round out their one-stop shop they're trying to develop on their platform, as well as a negative catalyst which could actually sell this stock off if history repeats itself. So we're going to get into all of that, plus the two stock charts I'll have to talk about, what we did the last week, where we're going, any patterns or trends we may see happening, which we do, of course. And so before we get into that, I do want to say something about the sponsor of this video, which is the Daily Upside. It is 100% free financial newsletter you'll get Monday through Friday in the morning. And I can tell you right now, I have seen stories there I cannot find anywhere else. And anybody who's watching the channel knows I'm a news junkie because I'm always sending stuff out to the members of this channel, trying to keep up with the macro and the micro view of what's going on in the market, not only locally, but on a global scale. And they do a wonderful job of that. All you have to do, click on the link down in the description right there, put your email address in, hit the submit button. That is it, okay? And you will get Monday through Friday daily news of stories that I've yet to find anywhere else. And so I highly recommend it. And again, it's 100% free, okay? And so let me know what you think down in the comments. I always like getting your feedback and stuff on things like this. And so without further ado, let's get into Palantir and SoFi stock news, starting off with Palantir. And of course, starting off with Palantir stock charts, you can see right here, guys, we were looking to see if we were going to complete this pattern where it had been on this upward trend. But like I said last week, I thought it would consolidate, and I think that's what it's doing because it broke through that trend line. And as you can see right there, basically I think what we're going to see is it's either going to trade sideways or in this range right here like it usually does. But the reason why, of course, I thought that was because we hadn't had earnings yet, right? That was the catalyst for these other two big moves on that upward trend line right there that it tends to respect in the past. As you can see, go ahead and highlight right there. And we got still a few weeks before we actually have earnings. And so that would be something to pay attention to. And the other thing really was the volume. You know, if you look at the volume right there, it was downward trending as well and decreasing, unlike the other moves up. And so it's fine. I can definitely see it consolidating, like you see the left over there before earnings. And so we'll see on that right there, something to keep an eye on. But of course, the big news that came out just the other day was NATO plans an AI strategy $1 billion investment fund as it seeks to stay ahead in the tech realm. And for those who don't know, this is going to be a 30-nation security pact where they're going to be putting this money up on. And if you look at what they're going to be doing here, they're going to be building new headquarters and test centers both in Europe and North America. And the thought process is simply, future conflicts would be fought not just with bullets and bombs, but also with bytes and big data. Keyword, big data. And what's going to happen is the Alliance's artificial intelligence strategy will integrate areas such as data analysis, imagery, and cyber defense. And of course, I don't know about you, but when I think of big data and data analysis, I immediately go right to Palantir. And you can see why, because some AI and data analytics companies like Oculus and Palantir have won a bunch of different military contracts. And so like Palantir just won the $823 million contract. That's the total number, of course, or dollar amount they can win or earn on that contract to provide data and big analytics software to the U.S. Army. And of course, there's going to be a lot of companies competing for parts of this contract, and there'll be quite a few hired. But the reason why I think Palantir, is going to obviously win a big portion of this is because not only, as I've said many times, they are integrated in the U.S. military like no other company I've ever seen. Plus, remember, the European countries, a lot of them hired them for surveillance when they were trying to fight terrorism and things like that. But also, remember this, more importantly, what did they do last year was they helped a lot of European countries roll out the vaccinations, right? By helping them analyze the data, get their supply chains correct, track who's getting it, things like that, and where it's being sent to. And so, that they also have the advantage of as well, because they already have relationships with a lot of these countries that are in NATO. And so that's going to be big to see, and obviously never hurts. It could be a nice big fat payday for them, but we'll see how it works out and stuff like that, and we'll keep an eye on it. The other big thing, obviously, in November, which is right around the corner, what do we have coming up? Earnings. All right, we saw by the chart, they usually run up after earnings, okay? And just to look at what the outlook is supposed to be for this quarter, they're projecting $385 million in revenue and adjusted operating margin of 22%. Full year, looking around adjusted free cash flow at $300 million. And a 30% revenue growth for this year and the next 4 years. And if you look at what they did in the first half, I mean, you're looking at a 49% revenue growth, $201 million in adjusted free cash flow, adjusted operating income of $233 million, and future growth is strong, you know, around 63% or $3.4 billion. And remember in Q2, and this is a key thing I'm looking out for, is the number of customers, right? They had 20 new customers. We need more than that. Coming into Q3, which I think will be more, and I'll tell you why. And then, of course, looking at the kind of customers they're getting, right? They have 62 deals worth $1 million, 30 worth $5 million. Those are the two categories I'm watching the most because I think that's what they need to increase the most. And the reason why I think they're going to increase that customer count from the 1 to 5 million range is because of Foundry for builders, first of all. And then second of all is all the SPACs they have made investments in, which those companies, most of them have turned around and signed contracts to use their technology to help them grow faster. And so I think you'll see that, and you gotta, I mean, to be long term, you gotta build those smaller customer bases up because they're easier to find than those huge conglomerate companies who can actually afford $10 million or more contracts. And so that's a big one. Plus it helps because if you lose a big contract and you don't have very few customers, it's going to hurt more versus if you have a huge customer base. It won't hurt as much. You can spread the damage out. And so that's a big thing, but you can tell they're trying to do that. And plus, don't forget, in Q1, Q2, they really didn't even have a sales or marketing team. They didn't. And so hopefully we'll get to see some effects of that now. But, you know, a lot of questions will be answered during this, earning call. And so let me know in the comments what you think about it. Whether or not they're going to hit the ball out of the park like they had the last 2 times. But if the stock does go up this 3rd time, obviously that makes a pattern because it takes 3. And so that's around the corner, so we'll see what happens there. And so next we're going to go into SoFi. And you can see SoFi, obviously, this is where we did the last video, and this is where we ended, so we're going up again this week. It just keeps moving up nice and steady over there. You can see it pumps on Monday and usually trends up a little bit. Ark trades sideways, so Monday tends to be the big day over the last 2 weeks. We'll see how tomorrow ends up. And so if you look right there, it did test that new resistance line I drew up last Sunday and got rejected immediately. As you can see, it's been since June, since it's actually been up there, and it stayed up there for about 3 weeks before selling off. And so that is definitely a hard resistance line for it to get through. And we'll see if we can make that this week. But the other big thing, look at the volume down here. You can tell, and last week I said this is institutional buying, not just retail investors moving this stock up. And you can just look at it and tell every single 30 days, it is more and more volume flowing into SoFi, right? And it's no coincidence that you saw this after analysts started kind of getting on board a little bit here, especially a big financial firm, and recommend the stock as a buy and setting higher price targets than it has. That is not a coincidence, okay? And so, one of the big things this week was they got a new partner, which is going to help them obviously build out the one-stop shop platform for them. And that partner was Pagaya. And so it says right here, obviously they expand access to financial services and create opportunities for customers. And of course, Pagaya is an artificial intelligence network, and they help their business partners grow by using their technology. And the big one people are looking at, like the 2 categories I'm looking at the most, are the auto loans and the insurance, right? And I think this is what's going to help SoFi the most as far as building out that one-stop shop, because they kind of have the other things. But it will help them find other customers and help their customers find better deals and stuff like that. But I think it's the auto loan and the insurance is going to be the big ones to watch right here. And Pagaya's business model is pretty simple here. Now, the customers approach their network partners with a need or a dream. Their partners leverage their networks to unlock better results for their customers by using the AI platform. And then when the results are finalized, the financial product is acquired by the institutional investors. And I think this partner will definitely help them in their cross-selling with their current customers and to attract new customers, because SoFi is well known for student loans, home loans, investing, savings accounts, that kind of stuff. But now they'll be able to also put in the insurance and the car loans. And so remember, it's all about being a one-stop shop. So I think you're going to see future partners bringing in other things as well. And so we'll see how this platform of theirs actually helps them. And so, you know, the other big thing, you know, we got a big IPO is going to be coming up, an EV IPO that is, and that's Rivian. So if you're looking to get in on it, you will actually be able to get in on this using the SoFi platform as well. And they're going to have a lot more IPOs coming. So, you know, we'll see how that goes. Let me know in the comments if you actually get in on this one. And in full disclosure, I don't think I'll be participating in this IPO anyway if they come out and decide to go with that crazy valuation they put out about a month ago that makes them more valuable than Ford and GM and all that stuff. So I don't think I'm going to do that. But if they come up with a, you know, decent valuation, maybe I will. We'll see. Let me know in the comments if you're getting in on it or not, okay? Because it is an exciting company, I understand. Now, the most important thing here, there's a catalyst that might be coming up that actually drives the stock price down, okay? And what is that? When they force the redemptions of their warrants. And a lot of people have been holding on these warrants for quite a while, hoping to get them redeemed, and now that the stock price is going up, it has reached certain threshold, okay? The period began on October 14th, and so if you look right here, there's two scenarios we're going to look at here and explain to you. So SoFi may redeem all the public warrants for 0.01 cent per warrant if, among other things, the last reported sell price of our common stock for any 20 trading days within a 30 trade dating period was over $18, okay? The second scenario is, same thing, they can redeem them if the stock is over $10 for any 20 trading days within a 30 trading day period. And so of course, I'm thinking about another week, they will reach the threshold of the $10. So they've been over $10 since October 14th for sure. I don't see the stock selling off enough to go under $10. The $18, not sure about that. They've been over 18 for about 9 trading days now, so they got a little while to go on that. But you know what happens normally with SPACs, you saw this with Lucid and many other SPACs, as soon as they announce they're going to do the forced redemption of the warrants. What does that mean? We're trading warrants for stock, and so that dilutes, you know, the stockholders, and so people tend to sell and take profits and then pick it back up at a lower price. Is it guaranteed to happen here? No, okay? But the odds are it probably will happen because it's happened to so many others. It's kind of what SPACs do, okay? And so we'll see about that. And a lot of people, you know, I've talked to have been waiting on this. They've been waiting on those warrants to get passed and make it drop, and then they'll get in because I think that's the last opportunity they're going to have to really get it somewhere between like $17 and maybe $21, somewhere in there. And so obviously another way to play this is, you think it's going to happen, a lot of people, I bet you the puts are going to go up, right, as far as the volume when this happens, because obviously it drops, and then they'll probably buy calls to ride it back up, because the stock does have, you know, a lot of momentum to it right now, and that should be just a small delay. And of course, all this depends on earnings, right, guys? We got that coming up around the corner as well. And remember, one thing that's different about this earnings is, remember in the second quarter why it dropped so much is because you had them have to reclassify the warrants and have a huge liability on their financials, which no other SPACs had to do before them, right? And then also they had to reclassify the value of the Galileo acquisition, and so that was a whole mess. But those should be one-time things, so that we don't have any kind of surprises coming in on this and that we're aware of course. And so, you know, but then again, it's not just about what they obviously present on their financials. It's going to be what their forecast is as well for fourth quarter, first quarter, and that kind of stuff. So, you know, we'll get to see. I'm excited about it. You know, let me know in the comments what you think, guys. And if you got anything out of this, please hit that like, subscribe button for me. I really appreciate that, guys. And don't forget, click on the link down in the description right there. Put your email address in. Hit the submit button, and you will get the daily upside. It is 100% free financial newsletter. You'll get Monday through Friday of stories that I've yet to find anywhere else.